Hello everyone, welcome to our new webinar. It's Monday, July 29th, so let me know if everything works fine. We have a chat box here, the primary one that we are tracking here on YouTube. So if you're watching this on YouTube, please let me know if everything is okay. Also, if you're a first-time visitor, make sure to subscribe to our channel so that you will be notified whenever we share our new content here. Make sure to press like so that maybe we will get more viewers of this webinar regularly each Monday. Actually, this will be my last webinar before I will leave for vacation. So then let me check my schedule. Then I will be back on, I think it's, yeah, most likely on August 19th. Okay, so I will be, because I'm leaving this Thursday, and then I will be off for almost 2 weeks. But of course I will be, as always, I will have my laptop with me. I will make sure to keep eye on the markets. Maybe we'll also show up in our chat room with members as well. Also, maybe we'll share something interesting if I spot something on Twitter as well. So make sure to keep an eye on our free analysis, free blog posts and Twitter updates as well. So we have a pretty busy schedule for this week. As you know, firstly, most important, rate decision by Fed, Bank of Japan, Bank of England as well. Then we will get some inflation data from Europe, Switzerland as well, even Australia. And then on Friday we have a non-farm payrolls report as well. So definitely markets will be volatile still in the middle of the summer. And so far, as you know, we have seen some pretty aggressive sell-off on the stock market, and I have been saying that probably stocks won't just continue straight to the upside till elections, that summer can be a bit tricky and choppy, and especially because we have seen pretty sharp recovery already before the summer. We actually even extended further to the upside, and of course the reversal was even more brutal. Now, if we firstly go to maybe to the S&P 500, as you know, we bottomed here on VIX, known as fear index. So obviously, as soon as the market is selling off, what we will see that there will be even more traders trying to book the profits, and you will most likely see that this will cause even sharper sell-off, and that's why we have seen some sharp reversal to the downside. And the most important ones were obviously in technology sector. Is now nasdaq 100 is down pretty aggressively. Now before we go maybe to the nasdaq 100, if we take a look here, okay, I still think that we are in the middle of this correction that will most likely be deeper, but we stopped at the first support here, and it looks like that we are now matching with the current live price action quite nicely with this seasonal pattern, where also you can see that normally in July and after July, especially when you had a pretty nice run like we had as well, you will see some stabilization. So this consolidation, I think it can unfold pretty nicely going into the elections, and then October, November, December, this could be a perfect scenario for more upside, especially if we will stay consolidating till then. Okay, of course there will be some relief rally, especially when you have this kind of news. We'll see what Fed can deliver, but always there can be some both-sided market actions, especially when you have a lot of news like we have this week. So if we get to rally on the S&P 500, watch out this 5,600. I also see some gap up here, so maybe this will try to limit some of the recent sell-off. And of course I would be looking this for wave B. Even if we see wave B much higher, still could belong to some kind of a flat formation where wave B is allowed to move to new highs. Okay, now if we look at the nasdaq 100, well, here we also have 5 waves to the downside, right? So you can see here that I made a simple draw for you. So if you focus on the red line or if you're not familiar with the Elliott wave principle, always when market accomplishes the higher degree 5-wave rise, you will see that market will tend to reverse and make a deeper ABC correction of a higher degree, especially when in the first leg you see 5 subwaves, because these 5 waves numbers are actually showing us where is the primary current direction. Okay, so this should be to the downside, and that's why we should stay focused on even deeper correction. As I've been saying, never buy the first dip, because there obviously, if someone wants to join the stock market, they have a pretty nice pullback right now. Okay, but they might be a little bit early. Normally they won't be right on the first bottom here. So my assumption is that after correction there will be even more buyers and even investors that will start again calling even for higher prices, but that's when we should be aware maybe on this third leg, and ideally this one will bottom maybe later this summer and give us some interesting price action patterns that could offer us some nice opportunity on the upside. But for now we just have to understand that this 5 waves down without overlap is bearish. But of course there is some support, but I'm just curious to see what will happen with this support around 19,000, because if this 19,000 is broken at the start of this week, then I'm afraid that even more downside pressure, okay, will be seen immediately within wave 3 of this first bearish impulse, that can be still in play then, but much more extended. And this, I'm afraid, is going to be very, very bad for the stock market. So we will see how these patterns will play out in the short term, but I certainly think that whenever we get higher degree 3-wave rally, I think if suddenly, let's say, we jump towards 20,000, I think that this could be quite interesting and important resistance zone up there. Okay, it's very interesting that we have cryptocurrencies doing quite well. This is very good because you have a strong cryptocurrencies, you have potential support or maybe relief rally coming on stocks this week, and this could mean that maybe cryptos will see even more upside. Okay, but watch out, as I will discuss later, watch out levels around 72,000 on Bitcoin, because there are plenty of liquidations up there that I already discussed last Monday as well. Okay, so for now we see stock market in a correction that is still incomplete. Short term is bearish, longer term stock are still bullish. Okay, we are just waiting on these corrections to unfold, but unfortunately this may last few weeks, maybe even 2 months, maybe even more till elections. I just think that if we'll see a correction deeper going into the elections, then this would be the perfect scenario for Fed maybe even to trying to stabilize, to calm the markets, even to cut rates. Okay, now if we take a look on dollar, and maybe just keep in mind that if stock market is now in a risk off mode temporary, and then obviously dollar should do well, and we already see some very strong moves of the dollar against the euro, against the Aussie, against Kiwi, especially against all commodity currencies. Even pound is coming quite aggressively to the downside. Euro not that much yet. Now, but when looking at dollar index, I just think that we are poised to head it higher. I thought that when I was doing an analysis that I will be able to present you some setup here on the long side of dollar index, but unfortunately this one is already unfolding now. So what I have been looking and also talked to you last time is that we have a completed wave C. More importantly, the break below 104 was just temporary. It was not something that lasted for days. It was immediately reversed. And this type of a price action normally suggests that you have some temporary low in place. And if at the same time you can identify 5 waves down, then be aware of a 3-wave recovery, because that's the minimum structure of a correction. So even if this is just a temporary recovery, it should be made by 3 waves. So actually we've been looking for this even potentially head and shoulders bottom formation here. Stocks are still in a risk off mode, so sooner or later I was looking that dollar should see more upside. But of course dollar in general has seen more upside versus commodity currencies, not that much versus euro. So dollar index, as you know, it more depends the euro. So that's why euro has been doing quite well, especially if you're checking crosses. and that's why dollar index has been trading at these levels. But so far what I see is 104.80, 105 could be the next projection here. But keep in mind that it's Monday. Whenever you see very sharp moves, breakouts on Monday, well, those flows can be completely reversed by Tuesday price action or Wednesday, especially when you have a lot of news from different sites, from different countries that could impact the price action. So I just think that we should be very careful what happens around 105. Also keep in mind that we are still, when looking at the daily chart, we are still trapped in a very big triangle here. Okay, so firstly, if I just try to describe the basic structure of a triangle, it's an ABCDE pattern, and now we are tracking wave E, the final leg of this contracting range. So I've been repeating that through summer, during summer, I just doubt that market will break out significantly. We will most likely move on both sides, and so far this has been playing out very nicely, and maybe we are now in a new recovery, but again, it could be temporary. It doesn't mean that dollar is very bullish. It means that maybe we're just in a temporary recovery, still trading away currently from this triangle pivot. So very nice upward projection. First one based on the short-term charts that I showed you earlier would be around 105. But 106 is very important level for the next few weeks. Okay, I think this could be a very interesting, very strong resistance, especially if at the same time we would see stock market already completing that ABC correction as well. Okay, so I hope you get the whole idea and there's perspective what I'm expecting for the next, let's say, few weeks, maybe even months. Now if we take a look on euro dollar, so we've been looking on the euro dollar down to 108. This still hasn't been seen, but looks like that there around 108 we had some spikes in that area. So I was hoping for and still looking for this area, but it can be very important potential support for this week. Why? Well, if we look at the hourly time frame, we can either be in a 5-wave drop here, okay, meaning that 5th wave is coming into potential support. And as I said, normally whenever you have very sharp moves on Monday, you have to be careful because these flows can easily be changed, especially when you still don't have US cash market open. Okay, so definitely US session is very important. At the start of the session you may already see some changed flows as well. Okay, it's the beginning of the session and the end of the session is this timing is this has a very important, it's very important to the market, same like some very important resistance or support. Okay, when you look at price you also should consider time as well. Okay, so 108 maybe some temporary support, then if we get a rally in 3 waves I would be looking for more downside. But same but opposite to dollar index, we are still in this ongoing range. Okay, but to figure out where maybe next very big move should unfold, well, you just have to zoom out a little bit and realize that we have these 5 waves up from that September lows, and this clearly shows where should be the primary very big direction when the next big breakout occurs. Now looking at cable, as you know, cable has seen some weakness today, now extended this first drop from the high even more, and this weakness came because there are even higher odds now that Bank of Canada could potentially cut the rates from, I think it was 51% chance last week, now it's a 58 or so. So this has triggered some sell-off here, but still just be aware of wave B rally before maybe we get even deeper price action here. But definitely I really doubt that this would be end of the correction. I just think that there is more to go here. Now Aussie inflation data this week. Let me check some in the chat here. Tim is here, Bill is here. Hey guys, I missed you earlier. Erhea is here. Sorry if I read this wrong. Urach Lim is asking, doubt Nasdaq will break down most recent low as it might weekly pivot. Well, weekly pivot, I mean Nasdaq 100 and markets moves on supply and demand. Okay, and then these cycles can change. So we never should just focus on one price and say that this will happen because we think that that's a major price level. Some price levels can easily be broken when something unexpectedly happen in the market. So definitely we always have to be open-minded. Now, Australian dollar, well, as I said, inflation in Australia is going to be released on Tuesday, or no, I think it's on Wednesday. And so far we already have some very sharp decline. So I think that this decline will just resume even to this lower, very big, to the lower side of this very big range. Still, we are in the first leg of this wave A. So watch out for maybe more weakness now in the short term. If I should bring out some levels, I definitely would be looking for 65.75 up to 0.66600 as a very strong resistance. So if we see a rally, I think that this could be quite nice resistance for our next sell-off into the fifth wave of wave A. So I just think that this pair will remain in bearish mode, even if inflation will come out hot. I just think that there can be some limited upside later on. Now let's take a look on dollar yen. So here we have Nikkei that my teammate also posted and shared regularly in our chat room with members, and he highlighted that whenever Nikkei is going to print new highs, we could potentially start seeing top for dollar yen, and this obviously has played out pretty nicely. And more importantly, we came out of a triangle here. So because that was a triangle, we should know that this most likely, this break to new high was the final leg of the higher degree impulse. And what's now happening is market is turning bearish very aggressively. And this has been triggered, as you know, because at the same time when US inflation in the US softened, it was reported 2 weeks back, then at the same time Japan also intervened in the FX market. So they used advantage of the momentum in the direction of the market. So they pushed it very significantly. And I think that this kind of a sell-off, when a lot of there were outflows, a lot of from Japanese stocks into Japanese yen, this has also impacted the stock market in other countries. Because if you look closely here, you can actually see that there was the perfect reaction to the downside at the same time. So I'm afraid that maybe if this Nikkei, which I believe will now stay headed down for a deeper correction, same with the dollar yen, I just believe that maybe stock market, global stock market will, I mean, I should say that maybe that's the reason why we should be aware of a deeper correction on the global markets as well, not only Nikkei. Okay, so I think that dollar yen obviously should be sell on rallies. We've been highlighting and tracked 2 wave counts. The first and primary was the wedge pattern. We've been calling resistance at 162, 164 weeks back, and now when we have this kind of reversal, I'm even more confident that important top has been in place. Now also I really doubt that Bank of Japan would not be hawkish, because now, I mean, they will try to do maybe everything to prevent the Japanese yen would move back to this level and back and fall very sharply again. So most likely they will try to use the rhetoric and actions that will keep Japanese yen at least stable, if not even more bullish across the board. So I think that even if we'll see some kind of a rally, there should be more weakness on dollar yen and also some other yen pairs as well. If you look at the euro yen here, definitely very strong breakdown. We've been tracking this resistance, the channel resistance as well. Now when we have this pretty aggressive sell-off, obviously we should see more weakness. I think that the first impulse here is still in progress, but watch out levels around 163, 164. I just think that this could be quite important potential support that could come in play after this correction is completed. We see some resistance around, interesting one, around to 168. Now if you look at pound yen, also ongoing bearish impulses as well here, same breakdowns. I think that we can be headed to the lower side of the channel. So for the next few months, of course, markets will not be always that sharp and volatile, but whenever you get some very nice retracement rally in 3 legs into your levels that you identified, then of course you may anticipate that sooner or later market will again resume in the current direction. Now, if we take a look also on gold, gold has also turned into a correction. As you know, we talked last time that we are most likely in the middle of this 4th wave retracement, so still plenty of room for this correction to unfold, and looks like that there must have been a lot of new potential buyers right at the highs, because we've been consolidating for quite a while here. This consolidation, by the way, was triggered since, especially since China announced that they stopped buying post buying gold. So that doesn't mean that they stopped. It means that at some point they will most likely resume. So I still think that on the longer term, there's a very nice uptrend that should resume. Now, 2,300, that's the beautiful support. Okay, so if you're looking to ride this trend and keep maybe some investment for months, then of course these are the levels that you should watch for. If you're more like a short-term trader, then just keep in mind that this might have been a temporary top here and that the correction is obviously incomplete. Why? Because notice that firstly we dropped out of this upward channel, right? So it looks like the top is in. Then you can also count 5 waves down from that high. So another indication that the top is in, that the correction represents the first leg of a deeper ABC structure. So watch out 2,430. That could be a very nice potential resistance for another sell-off, especially if we will rally in 3 legs into that area. Also, if you zoom out here, you can see that there was a very sharp sell-off each time when market moved towards this level. Even in July, earlier this month, we haven't seen any bulls that would confirm the breakout. Actually, it was just a temporary reversal up at that area. So I'm just thinking that maybe something similar still could happen here, especially when you have confirmed this reversal by an Elliott wave structure. Now let's take a look on crude oil. As you know, on crude oil, I have been tracking this triangle. It's still a range triangle, hasn't been broken yet. So we actually observed and still observing 2 ideas. The first and the primary is obviously the bearish one, because I think that if crude oil will continue to the downside, then obviously this could help bring down the inflation. Maybe Fed could then be closer to cut rates, and this could also bring the dollar down across the board. And now, if we take a look here, we have some very nice move to the downside. It's not really in 5 waves yet, but looks like that at least in the short term we could see a retest of this lower trend line support, and then let the market decide what will happen. But for now, I just think that there is room for more weakness. But if suddenly we see then a very strong bounce back towards 83, then of course this correction, unfortunately from April, May of this year last year, will then just become more complex, but still part of a downtrend. Then in such case, 100 is still very major resistance. But at some point, I think that we are closer to 50 rather than back to 130 or 20. Also, now when crude oil is coming to the downside, I think it's worth to keep an eye, and stocks at the same time, I think it's worth to keep an eye on dollar CAD. Okay, you can see it here. We have both coming to the downside. At the bottom of this chart, you have crude oil and the S&P 500. So if we are maybe in the risk off mode, then of course commodity currencies will not do well. Dollar should recover, and if also crude oil is coming to the downside, Luni may not see strength as well. So what we are seeing here is a potential very nice ongoing impulse. I shared actually this one on Twitter last week. I said that very nice support is at 1,370 around there for this wave 4. Now the price action is coming back to this upper range, so possibly wave 4 can be a bit of more complex, maybe even triangle, maybe still kind of a flat. But if we see suddenly dip into this area, I just think that there could be quite nice interesting bounce later on. Also, I think that it's worth to keep an eye maybe on this short-term patterns because the upside projection can be quite big, especially if the real breakout is coming here. You can see that we have some very nice trend line, very nice potential triangle that can come to an end if we really start breaking higher out of this minor consolidation. So the idea behind this is that in risk off mode, dollar should recover more, and these short-term patterns could actually give you opportunity with low risk, high reward here when you connect both smaller time frames and the higher time frame. Now, if someone is still thinking that maybe we are going to, as I said earlier as well, that we'll see some relief rally, I think, on stock markets. Of course, there are going to be some important earnings that will most likely impact the indexes as well. I'm thinking that AMD and some other big names are going to be released this week. But still, if you maybe consider that stock could see some stabilization, maybe watch out German DAX. Now, German DAX has still, obviously, it's not breaking out, but it's showing a potential triangle here, okay? I'm just wondering how to connect potential rise on the S&P 500 in the near term for a wave B rally, as I said earlier, or maybe rally on the nasdaq 100. I just think that maybe if US indexes will suddenly recover for a free wave rally, German DAX could easily be back at all-time highs. Okay, so still you have to be very careful here, and what I want to see is some more confirmation for in the next few days that really Nasdaq 100 completed that 5 waves down. Then if technology sector will rebound, then this could bring on also the other indexes, other sectors, and in such case I would keep an eye on German DAX, especially if we would break 18,650. Then we would have confirmation that this free wave drop is completed. But then my potential buy setup would be on a pullback back towards this trend line. Okay, so for now, still we are in the middle of the range. We are at the triangle pivot, so it could be quite too soon. But if we start, especially if we consider that Nasdaq could easily break below 19,000, as I said earlier, then of course it's very important for me to be careful here and maybe watch for the breakout first and then trying to catch the retracement. Okay, and it would be much easier to identify potential entries then and invalidation levels as well. Now if we also look at, as I mentioned, some single stocks, let's firstly take a look on AMD. By the way, if you just joined the webinar, please subscribe to our channel, put your notification on, please press a like, leave us a comment here if you're watching this recording later, or maybe for more analysis, just visit us at wavetraders.com. Now, here's AMD. As you know, we've been highlighting this rise as a potential correction, and so far we are seeing some very nice and strong breakdown through the channel support. So obviously we are here in a potential third leg of decline. Now ideal support would be around 100, but it's the first one not that far away, around 132. So it can be quite interesting level first for stabilization, but I just doubt that we will see any kind of a real recovery in the next few weeks. I just think that this correction has more to go, but of course there can be some choppy price action. The easiest part is now gone to predicting the breakdown below this level. Now we don't know yet if that's going to be a wave C down or wave 3 or something else. We just have to we will just have to keep a close eye on this one before I can confidently look for the next leg. But that's certainly still a bear trend in the near term, but watch what happens around 132. Now also the earnings will be released I think tomorrow after the market close. Now also if you look some at the other big names, I mean Amazon is stepping in a correction as well. My concern here is that we broke to all-time highs but was not able to hold these levels. We immediately reversed and fell back below the previous highs, and this kind of a price action, price reversal suggests that most likely we are headed here still for deeper corrective wave 4 or at least sideways. I don't see this pattern correction completed yet. Also, let's take a look on Microsoft. as well. Also, it has seen some very nice weakness here. We are now testing the channel, could be providing some support, but overall I just also think that on this one we could see a deeper wave 4 as well. Now here we have nvidia. As you know, I have been calling quite precisely this reversal and deeper correction on nvidia actually since mid of June. We said that I'm keeping an eye on this potential free wave drop and a reversal that occurred similar to this post earnings cycle back in February, when we have seen this earnings gap, a few weeks of recovery, price retraces back to this gap level, not really filled it, but to the open price after the earnings. And now this has been exactly the same play. Earnings very hot, it pulled the whole market, stock market together to the upside. After a few weeks, price tops out, and the most important evidence for this top was obviously this first drop, impulsive price action from the highs that looked like the wave A. And as I said earlier, even if you're tracking correction, you should be aware of a free wave drop. So you don't want to buy the first dip, you want to buy the third dip. So we have seen and expected even more weakness, and notice what happened exactly. It took us back to this earnings area. So I just think that now it's quite interesting potential support. So if maybe someone wants to join nvidia, definitely this can be quite attractive level, the first one, but we don't know if that's an ABC. What if it's 1 2 3 to the 5 to the downside? Then of course we may even retrace back towards 90 or so. So just keep an eye on that, and be aware of your position sizes and position management obviously at that area. Now if we take a look also maybe on Tesla has also seen a gap to the downside after earnings. Now this is not right anymore. So if we zoom out here, you can see that we actually stopped at the upper side of this very big triangle here. Okay, so possibly we are here going to stay sideways for a wave E for the next few weeks, and then maybe again after a few months we see price stabilization and recovery. And I think that very nice support is obviously at this lower range around 160, around 190 maybe already, especially if we'll see a free wave drop into that area. So for now it looks like that we could trigger more near-term weakness here, and that's not really the ideal scenario to be long, especially when you have technology sector and nasdaq doing what it's doing at the moment. Now let me check my list. Cryptocurrencies. So as you know, last week we discussed about cryptocurrencies. We highlighted important bullish price action, very nice strong patterns, and clearly it's still a bullish trend that most likely will resume, especially if you look at Bitcoin back to all-time highs, I think. Now it's very interesting that cryptos, as I said earlier, are holding up quite well despite move to the downside on technology sector. Trump had speech this weekend. Of course, he's looking to get more and more support for going into the election. So when I look back, it was such an obvious trade, right? If his speech was scheduled to talk about Bitcoin and cryptocurrencies, then obviously, what can you expect that he will say? So especially on their event. So obviously it was quite a nice expected bounce here over the past few days, and I think that there is room for more upside. But on the other hand, if technology sector, if stocks would see some serious more risk of going into this week, then even cryptocurrencies could see some more complex correction here. But still, any significant dip in the near term would most likely be just again limited at this mentioned support here when you're looking at crypto total market cap. So 2.24 trillion is still a very strong support, like we mentioned it and highlighted it last time. Also, before we go to Bitcoin, as I said earlier, 72,000 is important level for Bitcoin. Why? Because we have plenty of liquidations here. So when the price was here and after this pullback, I noted that most likely we are going to see this level tested because it's like a magnet, because you have plenty of stops up there, right? So after a pullback, market is now trying to move into this area, and then up here, when a lot of liquidations will happen, just be aware that there can be some new interesting dip, or maybe we'll go just straight through the upside. It really depends how traders will manage the positions. If there will be some new longs, very big longs, and you will have some very big liquidations below the recent swing lows, then this could be another reason why market could pull back to trigger those and then reverse higher. But no matter what, these are more like a short-term play, but on the longer term, I still think that we are going to take these highs out. Looking at daily chart, clearly that was a fourth wave. We are now rising impulsively, so I'm just thinking that more gains obviously is coming here. Of course, with members, we are always watching and observing the intraday price structures on some of the major currencies and coins, and also we share a lot of more altcoins also on a daily basis, even in our chat room. Now, if you look at the Ethereum, this one also has some very interesting recovery. Now, as you know, when the Ethereum ETFs, spot ETFs, began trading last week, what happened? And I've been talking about this, that most likely when something is overcrowded and just expected from the crowd, the opposite will occur. So as soon after that, market just reversed to the downside. So I just think that this is a quite interesting play. I mean, it's psychological game. Market will always do the unexpected, but still, when you zoom out a little bit, I just think that drop from that March highs is corrective, and that we will see more gains. Maybe even some head and shoulders pattern bottom formation is possible here, but obviously you would have to see 3,600 and stable price above that level. Let's say 1 to 3 days of daily close price above that level to make sure that we are really breaking out. But then 4,000 or even more upside, I think, can be coming. Now, Ripple is also interesting. I've been talking about this one as well in the past. I still think that it's quite attractive, should be attractive on dips. We might even complete it a higher degree ABCDE triangle here in a wave 4. But always when you try to build a trade plan, try to focus on minimum expectations, okay? Because then your potential risk reward would be much more appropriate. So here I think that at least in the short term we could see the retest of this upper trend line, and then let's see what happens at that area. If you start breaking out, then upside potential will be much bigger. But after a pullback, I just think that this seems like a reasonable target. Okay, traders, thank you very much for your attention. Thank you for being here. As a reminder, once again, I will not be here next Monday and then after 2 weeks as well, because I will leave for vacation, but I will keep you updated maybe with some tweets, and also I will maybe share out some blog posts, maybe, who knows, some short or some videos. So make sure to be subscribed to our YouTube channel, and I will keep you updated. As I said, for more updates, if you're new, check our services at wavetraders.com. Traders, good luck and talk to you soon.